Hello and welcome to the Tax Roundup for March. And this month we're looking at the small business tax offset, the increase that's supposed to come into effect on 1 July, and exactly where that's up to. We're going to look at why the ATO has R&D in their sights, and R&D advisors in particular. We're going to look at the new legislation on GST and low value goods, and the guidance released from the ATO. In cases this month, there's a case that highlights the pitfalls of self-education expenses. But first up, across to Brad, who's going to take you through an interesting new development from BMT.
We're excited to launch a brand new way to manage your clients' tax depreciation schedules. It's an online portal called My BMT, and what it will give you is access to all of your clients' depreciation schedules from the past and also ones that are ordered into the future. The ability to tailor these depreciation schedules and get financial year summaries in the way that you actually want to see them will also be available. The other thing we're looking at in here is live depreciation schedules. People change things in their properties. We do a full life schedule, but when they change things, they need to be able to update these depreciation schedules with the cost of the new items that put in and get rid of the old items that have been taken out. So the facility to do that and get yearly summaries of those changes, it will be within My BMT. Estimates of depreciation for clients' new properties, ordering of depreciation schedules, quotes for depreciation schedules, all will be available all within the My BMT platform.
Now across to Rae on the small business tax offset that's still stuck in Parliament.
Now, about the proposed changes to the small business tax offset. As we know, these changes, which result in a tax offset for small business income received by individuals from either trusts, partnerships, sole trader activity, which sort of balances out the corporate tax rate changes for small business entities. These are one of the changes that is in that bill that has been sitting before Parliament for quite some time. It was introduced back in September. We have a second debate reading started on the 9th of February 2017, but unfortunately we have no indication how fast this is going to go through. This is the bill that contains the increase in the small business entity turnover threshold from 2 million to 10 million and a few other changes. One of them is about the small business tax offset. Now, this is supposed to increase from 5% in the 2016 year to 16% over a 10-year period, with the first increase being to 8% for the 2017 year. But unfortunately, at this stage, we still don't know if that's going to go through before the end of the financial year. Therefore, you could have a scenario early in the 2018 year where you're trying to prepare tax returns for your clients, but you don't yet know whether they're going to be eligible for 5% or an 8% tax offset. Now, the tax office have taken an unusual step in saying that taxpayers can lodge the tax returns with the proposed change, and if it doesn't come through in legislation as expected, they'll go back and amend the returns. If the taxpayer amends the returns within a reasonable time frame, any interest or penalties will be waived. But unfortunately, we're still waiting to know when exactly this law might go through, if at all.
Now Michael's going to take you through those 4 new tax alerts on R&D claims.
Well, the ATO has signalled its clear intention to look a little bit closer at R&D claims made by companies under the R&D tax incentive rules. The ATO has released 4 taxpayer alerts, all dealing with slightly different types of scenarios, I guess, that they're a bit concerned about at the moment. The 4 issues that the ATO is looking at: firstly, taxpayers claiming R&D concessions in relation to construction activities. Second one looks at taxpayers basically claiming R&D tax offsets for what would really be classified normally as just ordinary business activities. We've got a taxpayer alert dealing with agricultural activities, and then a 4th one dealing with software development activities. Overall, I think the ATO's main concern is that people are making R&D claims for things that really just form part of their ordinary everyday business activity. So just to give you a typical example from one of the ATO alerts, the ATO says in the construction industry they've noticed a bit of a pattern of construction companies claiming R&D tax incentives on the basis that they're trying to solve technical problems in construction projects. But the ATO is saying, well, in many of those cases, those are normal problems that are faced by lots of construction businesses, and they can be readily solved by existing technology and existing techniques that are commonly used throughout the industry. Yes, in some cases you need to tweak those techniques or tweak the method that's being used, but you're not generally solving a technical problem, not having to go through that scientific method of solving that problem. It's just an ordinary problem that has cropped up in your business, and you're coming up with a workaround or a solution to it using existing techniques that are available to the public and in the industry. So it's that sort of thing that the ATO is concerned about. And again, when it comes to things like software development, there's potentially a bit of a grey dividing line there between, well, what is a genuine technical problem that you are using a scientific method to try and solve, which might well qualify for R&D tax incentive, as opposed to just ordinary problems that crop up which are more business risk as opposed to technical risk. Now, one of the other areas that we've noticed a bit of activity on is that the ATO has started to focus a little bit on R&D consultants as well, but also tax agents in terms of what are they telling clients in terms of their R&D claims. So this isn't just an issue for the taxpayer, the company that's making the claim. This is also potentially an issue for taxpayers and also specific or R&D specialists who might be assisting people with these claims. It's definitely an area that the ATO is putting a bit of focus on. The incentives are reasonably generous when people qualify. So good time now for clients and their advisors to be kind of stopping, having a look at what the ATO is saying in those taxpayer alerts. It may well be that they're complying with the rules as is and nothing's wrong, but it could be that some of the examples in the taxpayer alerts are somewhat similar to some of the real life scenarios that you're coming across. If so, it's worth just having a deeper look into that. The other thing that we just need to be really careful about when we're looking at R&D is the need for really good documentation to support the processes being followed to solve that technical problem, what efforts are being made to demonstrate that the solution doesn't already exist out in the public realm somewhere, and documenting the steps that have been taken throughout that process. That is the other very important aspect of qualifying and utilising the R&D tax incentive. So, clear warning from the ATO, I don't think they could be really any clearer that this is an area that is going to be looked at. So really important to revisit that area with clients where claims are being made, and for the next tax return as well, just making sure that really those strict requirements are met and that there's documentation to back that up.
Now across to Rae on the Law Companion Guide and the legislation on GST and low-value imported goods.
We have a new bill in relation to GST and the removal of the $1,000 threshold, which is going to take effect from the 1st of July 2017. Now, large suppliers from overseas are already set up to comply with their GST obligations when they make importations into the indirect tax zone, more commonly known as Australia. However, for those smaller suppliers from overseas, the Treasury has looked at this problem and saying, well, let's offer a simplified GST registration process, simplified processing, but they would not be eligible to claim input tax credits and they won't be able to get an ABN. Hopefully by making the system a little bit simpler, they will ensure compliance for those offshore suppliers who are supplying to non-registered consumers within Australia. The ATO have also put out a Law Companion Guideline, 2017 D2, which provides further examples and guidance in relation to when a supply is in connection with the indirect tax zone, and hopefully making things a little bit simpler for those recipients in Australia and the obligations for the offshore suppliers.
In cases this month, Michael is going to take you through that case of $60,000 worth of self-education expenses.
Now this month we're also looking at a case dealing with claims for self-education expenses and other work-related expenses. Now this is the Baccalaureate case that went through the AAT. Basically in that case the taxpayer was an engineer employed by a company that basically operated in the refrigeration air conditioning type industry. This taxpayer lodged their tax return for the particular income year claiming around $60,000 worth of work-related self-education expenses and travel expenses. Now if you submit a tax return with a $60,000 work-related expenses claim, you can probably expect that there's going to be some questions asked, and there were in this case, probably no surprise. The bulk of the claim related to self-education expenses. In this case, this taxpayer was an engineer, so working in kind of the air conditioning type field. The taxpayer was also undertaking a PhD, and as part of that PhD was involved in certain research and development type activities in the air conditioning type field to come up with new ways of doing things. The taxpayer claimed a very large deduction in connection with that PhD basically, and said they built these prototypes, they were undertaking testing, they had third parties involved as well. So it was around $45,000 worth of expenses relating to this work that they were doing that they claimed was directly connected with their employment activities as well. Now, the Commissioner disallowed the deduction and the AAT agreed with the Commissioner, disallowing those deductions. Now, while there was some connection between these activities, these self-education activities, and the client's work activities, what the AAT found is that there wasn't a close enough connection with their current earning activities. This wasn't a requirement of their job. This was kind of something they did almost out of kind of self-education to kind of find new ways of doing things in their field. What the AAT found was really what this expenditure was looking at was the taxpayer doing their own project, which they hope to one day be able to commercialise. So the AAT said, well, yes, there may well be a connection with some income, but this is possible future income from a possible future income earning activity. It wasn't at that point yet. This was too soon to be connected with those income earning activities from a point of view of deductions. So the AAT knocked back those quite significant self-education deductions. A range of other expenses were claimed as well, and one interesting point, this is something we get asked from time to time, the taxpayer said that they should be entitled to claim their travel between home and work because they were required to carry sensitive and commercial information with them, and therefore the travel became work-related. Now, the AAT accepted that may well be the case, that they may well have been travelling, carrying sensitive or confidential commercial information, but that wasn't enough to give you a deduction. That doesn't mean you're travelling in the course of doing your work. You're still just travelling to and from work. So again, the AAT knocked back that deduction claim for the travel between home and work and said simply carrying confidential items isn't enough to give you a deduction. The taxpayer claimed a whole range of other expenses, and in many of those cases, again, the AAT knocked it back basically through lack of evidence. Either lack of evidence that the taxpayer had ever paid the expenses, lack of evidence that the taxpayer had actually incurred the expenses personally. In some cases, the expenses were incurred in a completely different income year, so should never have been claimed in that year to start with. And in some cases, the taxpayer just couldn't show any sufficient or significant connection between those expenses and their current income earning activities. So while the AAT allowed a very small portion of the expenses claimed, the vast majority were disallowed and significant extra tax to be paid by this taxpayer. Again, another warning that, first of all, significant deductions are likely to be queried by the ATO, but also the importance of establishing that connection between your current income earning activities. It needs to be more than a flimsy connection. It has to be a reasonably strong connection there. The other thing is the importance of evidence. Again, there were probably expenses there that the taxpayer could have been able to claim, but just couldn't back it up. They just didn't have the evidence to give to the AAT for them to be able to say, yep, that's fine, you can claim that deduction. Had they been able to do that, there were probably other deductions they would have been able to claim. It was just lack of evidence that let them down. So again, another warning, not only for practitioners, but for practitioners to pass that message on to clients, particularly where significant claims are being made, where there's a fair bit of tax at stake. It's so important to make sure you have the evidence and that you keep it, and that it supports what you are trying to assert to the AAT or just simply to the ATO.
And that's the tax roundup for this month. It all feels very busy right now. If you don't have time to take those questions from staff, do the training, look after your work papers and get everything into line for this year and next, then have a chat to Julie on 1800 800 232 and see what Knowledge Hub can do for your practice. Speak to you soon.